I made over $9,400 in the last 30 days trading less than 90 minutes a day, 4 days a week. Let me show you how I found, entered, and managed every trade I took this month so you can see what it's exactly like trading this strategy and how you can execute it yourself. So to show you these are real returns, here's my live NinjaTrader account. We go to performance this month. We're at the end of the month. You can see my gross realized P&L is a little over $9,400. And I took one loss. It was around $650. That's generally about how much I risk per trade. And my wins are generally 2 to 4 times my risk. And so over the month, that added up to be a little over $9,400. And then down here, you can see here's all the trades I took this month that we're gonna go over in this video. Every trade I took this month is going to have something unique about it that is important to executing this strategy. I will go over my simple trade entry checklist, but trading isn't that simple. There are nuances that you can only learn by watching how this sets up on multiple different trades. What you'll notice over all these trades is they're all pretty much the exact same setup, because what I found is to be successful at trading, you have to make your strategy almost as simple and consistent as possible. Having multiple strategies and multiple patterns just didn't work for me. And so trading one specific strategy made it way more easy for me to be successful because you're able to master one thing. What we're looking at is oil futures. You can trade this strategy on really any market and time frame, but this is what I personally trade. And so the first thing I do when I come into trading is, we're gonna go over our first trade here. It's November 1st. This is the first trade I took this month. All I did was I first looked at the 15-minute chart when I opened it. So what I do is I just like to look at a larger time frame to find support and resistance levels. Pretty much all I saw was, okay, there's kind of a support zone down here, and there's a pretty clear resistance zone up here as well. You know, the market's kind of come up here, hit this a couple times, did a pretty big sell-off. I think that this sell-off right here shows good momentum and selling pressure from this level up here. And so that's why I wanted to watch it when the market came and touched it again. What I wanted to look for is this level coming into today's trade. And this is my zone I drew. And so what we're watching is the recording of me taking this trade. And then once it gets to these levels, I look for essentially a checklist of things to show up to get in on a trade. And that first thing is looking for that really major key support or resistance level. And then of course, we just want to try and capture the swing lower. And kind of just to preview, you can see the market sold off really nicely off of that level. So let me walk you through how I actually enter and capture some of that move. And so how I did that was I kind of just saw, okay, well, it looks like there is kind of a trend line right here. You can see it kind of started here. It broke it a tiny bit right here. Breaking the trend line by a couple candles is not a big deal. And then you can see it bounced here, covered up a little bit by my trade. And then it tried to bounce here by a couple candlesticks. You can see a couple wicks. But then it eventually broke that. And so for me, that's a solid reasoning to think that, okay, it's reversed, it's broken. Another big thing is looking for a head and shoulders pattern, basically. The market puts a head and shoulders here. It essentially makes in its uptrend, you know, it's making higher highs. It makes an extreme high here, and then it makes a lower high here. And you can see right here, the market does break out of our resistance zone right here a little bit, but that's okay. Sometimes it can break up a little bit, but then it can still realize, okay, now it's gonna go reverse off of that level. And then so the final kind of thing to jump in, just kind of quickly going through this first trade, I wanna see a rejection candlestick or some kind of engulfing candlestick. And so that's what happens right here. If I actually just zoom back in the recording briefly, this is what I looked to get in on. The market kind of, how I see it is the market's making an attempt to keep pushing higher here. And I see it as, okay, the trend's gonna continue higher. It's probably going to push up right here. And so what this candlestick, these kind of two candlesticks show is, well, the market's making that attempt, and you know what? It's given up. It's not happening. And so from there, you can see I pretty much just jump right in on trade once that candle finishes forming. And then I put my stop above this swing right here. And so that's kind of what I expect to see if, you know, if the market kind of breaks this. I just like to get out and kind of move on. And you can see here, kind of zooming forwards again, is the market kind of almost came up here against me. I was kind of down a bunch of money. But when you're trading, you have to just stick with your plan and let things play out. Because, you know, if I got scared based on this candlestick right here and I just closed up trying to save a couple $100, And you know, I would have missed out on this massive swing in my favor. And so this kind of really starts getting going in my favor. I'm looking at, okay, there's kind of a tight downtrend. There's a potential support level. And then I jump into a 1 minute chart and you can see there's a really tight downtrend. And so I like to manage my trades. If they get really going in your favor really rapidly like this, I like to jump out because the idea is they can have a really fast reversal move as well. And so I kind of trail up my stop based on breaking this downwards trend. And that is a really good way to capture the profits, capture the move, and then move on to the next trade. So moving on to the next trade, this day was pretty wild. I actually took 2 trades this day and they were on new markets that I'm testing out. And so it was a lot of new things that are really good for understanding how to trade and move into different markets. And so the first trade we're looking at was on the euro dollar on the 9th. It's been 8 days since I last took a trade. And so that's how this strategy kind of works, is you have to be really patient. When you're patient, you can see it pays off really well, right? The first thing I do every day, come into the charts, look at the 15-minute. We're looking at the 15-minute chart of the euro dollar right here. And so just to show you that more is what I was looking at for that day, just drawing my levels. The market had kind of made a pretty good zone down here based on these kind of double bottoms and swings. So that's definitely a support zone to look at for. But currently the market was, you know, market for me opens up at 6:30, which is pretty much right here. The market had clear movement the previous day and overnight, I think creating a solid resistance zone up here. And so then I would just jump into a 5-minute chart and then see how the market kind of came up to this level and jump in based on, you know, a couple of things I saw. And so to walk you through exactly how I entered in on that trade, we were at that resistance zone and you can see it made a really big breakout of that level. And so what I call this is it's an exhaustive move or a failed breakout, as the market essentially made an attempt to break out of this level. You know, you have all these people that like to buy breakouts of trades. If we just look at the actual 5-minute chart again, is what they're looking for. Breakout traders are trying to buy this breakout of this resistance zone right here. And so that's what they're trying to do. But sometimes is the market can do that. It'll break out, but then reverse and fail on them. How I do that is I use that as a confirmation that, okay, the market is likely or even more likely to reverse at this resistance level. And I can catch a big downwards move based on that. And so I actually got in this trade slightly before this trend had broken. And that's okay sometimes because I had a really strong catalyst here. And then as well is if you look at this, there's a really strong bearish reversal candlestick right here. And so I thought that was a really solid confirmation to jump in on a trade and bet that the market was going to reverse here. And you can see that it did start to actually break that downwards trend. As well, it created that lower high that we're looking for. Again, it's a funky head and shoulders, but it still makes that lower high that we're looking for. And so how I actually enter my trades and figure out how much risk to take and where to put my stop is I actually have a tool that I take and put on. So if I'm going to enter right here, and I'm going to put my stop right here above that candlestick, I take this drawing tool that I've made and I have a fixed set of risk that it tells me that I need to trade 5 contracts to hit a fixed amount of risk. And so for me, that's $600. And so if it shows that if I trade here based on my stop, I will lose $625 if it goes against me. And if I go, you know, here's 1x, 2x, 3x, you'll see I'll make, you know, about $1,900 on 3x. And so that's kind of a really helpful, useful tool that I use to know exactly how to trade and enter each trade, because my stop loss is always a different amount because it's based on this candlestick. And so if this candlestick is larger or smaller, I will have to trade a different number of contracts. And you see, if I move this, if the candlestick is smaller, to hit that same risk amount of 650, you have to trade more contracts. And so this is something I found extremely useful for my trades that I've made. And I pretty much use it in every trade, even though you don't see it in these recordings all the time. Because when it comes to trading, it's extremely important to keep your risk the same amount across every trade, because you don't want to have a loss be way larger and take out a ton of wins. And so as that trade played out, I actually was also watching the NASDAQ futures. I watch multiple markets because it allows me to find more opportunities. And so how I found that is, again, just looking at the 15-minute chart of the NASDAQ futures. There's a pretty clear resistance level up here. And then also there was a pretty good little support level right here. Looking at a 5-minute chart, I think it makes it pretty clear as the market was clearly bouncing off this level. There's definitely supply down here. There's a good chance it's going to reverse. And so that's what I was watching as the market kind of went up and then sold off into this area around a 7 o'clock-ish time. And so I was looking for a potential reversal higher, which you can see happened. Now, one thing about this one that is kind of different is the market was really choppy at the time. And so I had seen spots where I kind of thought to get in. And so sometimes this will happen with this strategy and with any strategy is you'll see almost false signals to get in. So it's really important to figure out how to not get essentially tricked by the market to get in based on these. And so one thing that the market had done is the market opened again at 6:30 my time. And so what I saw over here was the market had made a massive rip up into our actually resistance level, but it never made a trade setup. And then it had a massive rip down here. And when the market does this, usually it can be kind of a signal that, okay, there's a lot of momentum there. We actually might break this support level down here. And so what I took from that is I need to let the market kind of lose some steam, see what's going on. You know, there's this other trade setting up that I'll jump in on in the euro dollar. And so I came back to this and saw that, well, the market had kind of sat here for, you know, about 40 minutes. And so what I saw with this is jumping in is it had a clear break of this downtrend and it had started to lose that momentum. And you can see that we made basically a higher low right here. What my concern with getting into this trade was, well, the market's already kind of, it's looking really sloppy, and I think there's a lot of downwards momentum. There was a really big bearish candle right here and right here, and then we started to actually see some strength. And so right here, it kind of made a new high. This kind of break move here, I think, shows some strength. And so my thinking was, okay, this right here, these 3 red candlesticks could be its final attempt to go lower. Because of that, that's kind of the final confirmation that I like to see when this essentially fails. And it had this really strong green candlestick here showing a massive push higher of essentially it failing to continue the trend lower. And so because of that, the idea is, well, if it fails to go lower, it has a higher chance that it's going to reverse and go higher, because, you know, you're trapping essentially people are betting that the market's going to go down here. And if it doesn't, well, they have to get out of their trade, which is going to push the market higher. I was still a little nervous with the market being kind of whipsaw here. Sometimes the market will get into modes like this where it just kind of gets into a sideways sloppy trend here. I kind of wanted a little bit more confirmation. And so if I kind of zoom back in the trade so we can see these candlesticks, is I jumped in right at this green candlestick right here, because my thought is, you can see there's essentially like a little wedge right here. And so my idea was, well, okay, it failed this attempt to go down right here. And there's a little attempt to keep going lower here too. This big bearish candlestick, it's failing that again. And so I think that after this big green candlestick right here, that's a really solid confirmation. Right when I get in, you can see that this red candlestick just starts puking lower. And that's when, you know, you're thinking, I'm an idiot. I should have waited for, you know, I should have done something else. This was a bad trade. You know, every time I get into a trade, I'm nervous. There's always that nervousness that you're going to be wrong, or that you're reading something wrong. You know, the market has infinite possibilities. And so right now I'm thinking, oh, you know, I'm watching these 2 candlesticks kind of it's not working out right away. And I'm thinking, well, I should have bought up here on the actual breakout, because I wouldn't even be in this trade right now. And then zooming forwards a little bit is it eventually does break out in my favor. And, you know, using that same tool, I had my entry here with my stop loss right here. And then the idea is that I jumped in on a trade long. And now this trade is actually on a 1-minute chart. And so I really have started to expand my trades onto multiple charts and multiple time frames. And so that allows you to find more trades, because when it comes to trading, the way to be profitable is find something that really works for you, that you can be very consistent with to increase your win rate as much as possible. But finding some of those it doesn't show up very often. You know, I only took 1 trade this month on some of these markets. And so having multiple markets in play and multiple time frames allows you to see this stuff more often. Once we kind of had a little bit of a breakout here, I moved my stop up here, my stop loss, with the idea that I think that, again, keeping the idea that we are in this kind of tight range. If the market comes up to essentially right here and sells off, well, I just want to get out of the trade. It's not worth trying to deal with, you know, oh, is it going to come back and then keep going? You know, when the market's in a sideways pattern and it's just going to sit there. And so it's either going to break out here or it's more likely to just kind of sit here. And I don't want to deal with that. I want to get out, you know, take the scratch, essentially, take the risk off the table and move on to a better trade. So I've always found that the best trades kind of work out like this in your favor pretty quickly. You can see it started to break out higher and we start to have almost that exhaustive move in the flip side. You see right here, this big candlestick kind of triggers in my mind that, okay, we're getting up to this resistance zone up here. It's already where the market sold off once. We're up about 2-3 times my risk. And so I need to trail up my stop loss. And so right here, this candlestick kind of pulls back here, reverses. And so I elect to tighten up my trailing stop. There's kind of a tight trend line right here, again, to manage that trade more closely. Essentially, you can see it starts to lose that momentum. And so that's what I'm looking for, is I'm looking to get in when it kind of loses the momentum of the downtrend, catch the move up, and then get out when it starts to lose the momentum on the flip side. Just essentially you're catching the easy money. Yeah, sometimes you don't capture the whole swing, but again, the idea is you're capturing 80% of the swing. Trying to get in down here at the lows and then get out here at the exact highs is really a way to set yourself up for failure. And then going back to my other euro dollar trade that I had on at the same time, is I actually went for a walk with my dog, because you can see it's been going for about 2 hours. It's really doing nothing, and you just have to kind of distract yourself. You know, it's hard to kind of just sit there and watch paint dry, basically. And so what I did was I just left my stop where it was. I actually put in a limit order at 3x with the idea that, hey, you know, if for some reason while I'm gone, this thing just zips in my favor and knocks me out at 3x, I think that's a great spot. It's kind of down here where it's probably a support zone anyway. And at this point, I came back, went to break even because I could watch it, and took the profit target away. And then all of a sudden, a massive move happened, and it was because of some news. Some massive moves started going in my favor. And to manage this was I actually went to a 1-minute chart again, because it was moving so rapidly. It was happening so fast, I didn't get a chance to change my recording. But to show you on an actual chart, here is what I did. And so what I saw was the market was breaking down massively in my favor, and I hit about 3x. And so here was my drawing tool, 3x was about here. And so this trade actually got to about 4x. One thing I didn't explain earlier was my full size was 6 contracts, but I elected to trade 3 contracts because this was my first time taking a trade on the euro dollar on the 5-minute. And so I elected to trade half size. When you're doing something new, don't go full size. Take it easy, take it slow. Trading's always a process. And so once this broke out in my favor though, I elected to do that tight trailing stop of just previous candlestick high. And so I got knocked out right here on this candlestick. And again, you can see the market then made a quick reversal off that. And so I captured about 4 times my risk on that trade because it was about $300 per trade. And that trade worked out really, really nice. Now this next trade was a little more unconventional, but it was still a really, really solid learning win for you to see. And so again, like I always do with my trades, first thing, coming into a 15-minute chart, we're looking at the S&P 500 futures now. And so November 15th is when I took my next trade. Again, it's just kind of waiting for things to align up. This day, the market had been in a really solid uptrend for a while, really not showing much in terms of levels. So that's why it kind of took a while for something to set up. And so here on the day when I, again, just briefly open the charts, is at about 6:30. This is what I'm seeing. There's some kind of crazy big swing off of here. This is usually news before the market opens. And then there's a couple little bottoms right here that I'm looking for maybe some kind of bounce to set up off of. You know, you don't know what's going to happen until it happens. It's about just how the market sets up when it comes to those levels. And so looking at an actual chart then with those levels, as you can see right here, here was that at 5:30. A lot of the time then some news pops 1 hour before the actual market open. Had a big spike, sell off, came to our level. This is pre-market, so I still drew off of these 2 bounces. for the support zone down here. And then of course, keeping track of this high up here as well. And so then I followed my general strategy. And so there was something slightly different about this one. But you know, first thing going through our checklist is looking for that support zone. We had a support zone down here. Downtrend was broken. You can already kind of see that there's no really strong momentum down. Whenever you have a really strong downwards trend, you really need to make sure that the downwards momentum is broken, because a lot of times a massive downwards trend will come to a support zone, have a quick bounce, and then just sell off. And so what I like to do in those situations is kind of wait for it to do this a little and then capture a move higher. And so that's kind of what I looked for with this trade, is seeing that we were already kind of in sideways momentum, but we were having good swings. It wasn't super choppy, kind of like that last trade on the NASDAQ. You're having good movement here. And so I think this is plenty of movement to get in a trade and then either move to break even when it kind of starts breaking out in your favor. You know, there's room to profit. And so that's a big thing to remember. And so we had this little tight downtrend here that was broken. That's kind of a minor trend that I like to see broken. But another thing, again, is looking at that catalyst that I like to see. Is you can see we broke the support level here by kind of a decent amount, but it was just 2 candlesticks. And so what this shows me, again, the market tried to break here, and then there was a lot of buyers that came in. Whoever is on the market side of things really liked this level, and the supply and demand pushed the market up quickly over this candlestick. You can see this is a really large candlestick. That's why to me, it shows that, okay, there's a lot of buying pressure down here. And so it's likely to make the market push higher. But again, I don't like to get in on that signal. I like to use that as a confirmation and then wait for kind of the signal over here to show up. And so usually, again, that's going with the swings and looking for that kind of head and shoulders. And that kind of set up here. But what I did here was kind of similar to the NASDAQ trade, is going back to showing the actual entry, is what I saw was, okay, the market had our nice little reversal exhaustive move here. And then look at this. This just looks like a bull flag. What this pattern is showing is there's a consolidation right here. And once you've kind of seen the market, you almost have an intuition of, okay, I'm seeing it consolidate here. It's had this, you know, I'm seeing a lot of reasons why it could reverse here. And so this is, it's almost like it's waiting, it's condensing before it kind of bursts and breaks out. And so that's what I did here, is I got in on the breakout of this little sideways trend here as that kind of final confirmation. And then I used my risk reward indicator to tell me that I need to trade 3 contracts of the NASDAQ to hit that $600 risk reward, because then, you know, again, I'll hit my profit target that I want up here. And then from there, like always, it's just about waiting for the market to go in your favor, not touching it, and then managing as you see fit. And so what you can see here is we are kind of getting, there's, you know, kind of a resistance trend line here, or, you know, the market could definitely kind of have swings here. You got to be aware of it. It could sell off here. But you can see there's, I would say there's a pretty clear uptrend right here. And so I like to, again, use that as a way to manage my trade. And so I haven't moved up to break even technically here, but I mentally moved up to break even. If the trend comes here and breaks this trend line, I'm going to move my stop loss up to wherever that is. Just because you don't see me move that, it doesn't mean that I'm not actively really watching this like a hawk, planning to move it if it all of a sudden breaks against me. And so you can see it starts to, again, thinking about it doing that kind of reversal exhaustive move on the other side. And so I trail my stop loss up there, expecting that it to have a very quick reversal. And you can see that at this point, it's, again, we've caught 80% of that move as the market comes back really quickly. And so I found those to be really significantly powerful ways to get out of the trade. So jumping right into our next trade, this is a trade off of the euro dollar. Again, exact same thing doing here. Like always, looking at a 15-minute chart, seeing that, okay, we have a solid swings back and forth here. I think there's a really good resistance and support level here. And so market came up here, and all I'm looking for is we got really good room to profit down here. And so this is something that's really important about this trade, and I haven't really talked about, is looking at this. So it came up here, and then we go into a 5-minute chart looking for the trade. And so again, this is on a 5-minute chart of the euro dollar. And now this time I'm actually full size on the euro dollar. I feel confident. I've watched it for a while based on, kind of our checklist. It's broken that trend line. We're at a level, a resistance level, and then it's made, kind of that exhaustive move. You can see over here that the market's kind of in a choppy range. And actually, if we pull up the 5-minute chart to kind of look at it a little bigger, you can see that the market had a really big move from the lows, chop, which is kind of what we see over here, and then a big move higher. And so what I see with this big move higher is it's kind of that exhaustive move, that catalyst we're looking for. The market's attempting to make a breakout here, and it's coming up into our zone, giving us our signals that it's going to potentially reverse. And so again, all I look for is, kind of it to make that lower high here. It gives us, I entered in on this really strong bearish candlestick here. And so that puts us with the tool again, seeing I need to trade 7 contracts to get full size, and 3x is about here. And so I actually had a limit order again because I was out for a walk. It's about 9 o'clock. I usually am finished trading about 8 o'clock, but if I have a trade on, I'm gonna let it do its thing, right? While I'm away, it starts kind of doing its thing. It's looking great. And so the thing I haven't talked about yet is why this trade is really strong is, well, down here is 3x. And so again, you always want to, with your trades, you want to be getting in them when there is room to profit a good amount. You don't want to get in to, even if it sets up perfectly and everything looks amazing, if there is a support zone right here, it's not worth the trade. You're taking risk jumping into the trade initially right here. When I jump into the trade, it is not that far for the market to move against me for me to lose $600. And so because of that, well, I need the payoff to be at least 3x. And so, of course I don't hit that every time because of my management style, but I need the potential in the market to be there. The clearest support level that I see is down here. And so I think because, the market moved up here in a nice swing, I think if it's gonna go in my favor, I think there's a good chance it goes here. And if we even bring up the chart, looking at kind of the bigger move that it has the potential to, go to that minor support, but that's a minor support level. The major one is all the way down here. And so that gives the trade potential to be even higher. You see up here, it's come up here and it moved way lower really fast. And so, when you're trading, you don't know what the market's gonna do. You just have to jump in on the opportunity and wait for it to play out. And sometimes you can capture a massive move like this super easy and you get, a 6, 7x trade that makes your year. And so that's why over time, what I've learned is when the trade starts to kind of go in your favor like this, the trade's looking really solid right now. It's gone about 1x in my favor. But if I trail my stop loss up too early, it can have a pullback here. The market could easily come back up here and then puke lower. And I've done that in the past where I trail at my stop too tight and I get knocked out of the trade and I miss out on the massive move. And the reason because of that is when you're trading, it's scary jumping into a trade. You take the risk of this, you put risk on, and for me, it's in the back of my mind of like, okay, the trade could still come all the way against me and I lose the $300 I'm up, or even the $600 I was up here, and then I lose the $600 that I'm risking on the trade. So theoretically, it feels like a $1,200 loss, not even a $600 loss. I don't know how to say it, but that's just a part of trading. And what I've realized is over time, it gets easier to just deal with that. And I think starting out smaller with your sizing helps with that too. Start out small so the swings in the money aren't as big. It's taken me a while to get to this size, and that's just a process of trading, is slowly getting better and bigger over time as you become more comfortable with everything. That's what I've learned is leave it be. If this is a solid level and it's gonna reverse, it might come up here again, but overall it's gonna reverse in your favor. And you see right here is it started to go against me, but after this, and this isn't a perfect example where this has happened to me, is I have jumped out at break even here. And you can see the market's kind of come up here and it's made, I think, a really solid looking reversal here that has the potential to keep going lower. Now, that's the thing when you're managing in a trade, you're going to be reading into all of these little things and trying to, make ideas of what might happen. Try and not do that. Try and just let it be. Keep your hands off the keyboard, go for a walk like I do, leave the room, walk around in circles, sit on your hands, because you have to just let things play out. And of course, every trade isn't gonna work out. I actually end up losing this trade. And just looking at the 5-minute chart, you can see the market had a massive breakout higher from this resistance level. And that's totally okay. You're not gonna magically catch the reversal every time and it work out. This is why having that risk reward in your favor every time is really, really important, so that when you are wrong, it's not that big of a deal. It doesn't hit your results that much. And then when you're right, it puts you in the right direction really, really favorably. And so one thing I haven't really talked about yet is combining the time frames of the 1 minute and the 5 minute, or whatever time frame you're using, to help confirm these trade entries. This trade does a really good show of that. And so what we're looking at is oil futures. And so again, as always, 15-minute chart is the first thing I look at. And you can see right here, coming into the first thing of the day, kind of 7 a.m., 6:30 a.m., I'm just looking at, okay, where are the lows? There's a high right here. There's kind of the market had a sell off here, and it's kind of come down to here, bottom 2 times, and then there's been some swinging in back and forth here. And so that's where I just kind of draw these levels off of. And so what we're looking for is the market came down to this support level right here. And then I went from there into the 1 minute chart we have right here. And I looked for reasons why this could reverse. And so the one thing about this trade was, if we look at a 5-minute chart of oil, is the market was really back and forth. And so when the market gets like that, and you can see it's really choppy, it'll sell off, but come back up. And so the idea is, well, is there that risk reward ratio that we're looking for? Is there the potential in the market to have a greater move in the direction quickly that we can easily capture and reduce our risk with a smaller, tighter stop loss that we can get in? Usually I have been trading oil on a 5-minute chart. And if I tried to jump in on a long down here and, set my profit target of 3x up here, it barely makes it. So it does make it, but it's a lot harder to kind of get that risk properly. And so what I decided to do was go in to a 1 minute chart. I think that allows me to have a more accurate entry. That's the whole idea of the smaller time frames, is it allows you to get a more accurate entry. And then I'm sure at this point, we were at a support level. We're looking for that downtrend to slow momentum. What I saw for the biggest reasons that the momentum was slowing down, which is kind of a little interesting here, is look at this candlestick right here. We had some big candlesticks right here, and then there's this massive, massive candlestick going on right here. And then it reverses and kind of goes back to the lows here. And then we go into sideways chop. And then we had a breakout candlestick right here. And so one thing is, what I used to do is I would see this breakout candle here forming. It looks like a massive green candlestick. And this is why I don't jump in long based on the break of that trend line. I like to wait for it to make, the signals that we're looking for over here. And we'll talk about it in a second. Because if you jump in right here, well, sometimes it'll happen and it'll work out, but a lot of the time you're jumping in based off of FOMO. You're jumping in, because of a couple things you see, but you haven't really waited for the signal. It's more of a reactionary trade entry. There's a lot of funky market movement going on right here. I think maybe there's momentum to keep pushing lower. And so one thing I like to look for is almost that final attempt for the market to break lower. Essentially that failed breakout, that attempt where it really attempts to go lower, and then it reverses, essentially trapping people or baiting people to, oh, the market's gonna break out here. They get excited, they jump in. It really dries up the sellers in the market because they all jump in, and then it reverses and makes a really, really strong potential for there to be an immediately flip in the market. And so to show you that forming in real time is here, I'm just watching, waiting for the market. It's kind of looking good. And then all of a sudden we have a massive momentum push lower with this candlestick. It's turning red. It's attempting to break lower, and then you can see it immediately flips here and goes higher. And so for me, it's doing that bait and switch to where I think, okay, that's a really good show of it tried to go down, there was a momentum to go down, and then it shows a massive switch in momentum of the market going higher. And then from there, I jump in, I use my tool to tell me, okay, I need to get a certain amount of contracts based on my risk. And actually my tool said I needed to do 4 contracts, and I accidentally entered in on 5. And so I was actually slightly larger size on this trade. And so that adds to the intensity. And this trade happened really quickly because it's on a 1 minute chart. And so while this is happening, it's pretty intense. For me, I don't know what you do while you're in a trade, but when I'm in a trade and I'm just kind of waiting for it to play out, it's kind of nerve-wracking. And so what I do a lot of times is I, walk around in circles around my room, talk out loud essentially of what I'm nervous about and why I want to get out. Essentially talking through the emotions that I'm feeling because I don't want to jump out because I'm scared. And so what I did was, I just talk through that and say, no, I'm following my strategy. That's what I'm doing. And so because I was already up 3x on this trade and I was a little larger size, I elected to actually close out pretty much when this next candlestick closed. Because this is a large candlestick, you can see we essentially have an exhaustive move. It's a lot to wait for it to come back to that trend line here, because you can see if I waited for it to break this trend line, I would have given up probably about half of those profits. And that is not something I was looking to do. It had made the move we were looking for, take the easy money and kind of get out. So now let's move on today and the biggest trade that I took this month. And it took my month to another level because I made an insane amount of money on this trade. This trade really shows you the power of this strategy, because most of the time I do get 2 to 3x my trades, but other times I can get 4, 5, 6. I think I've even got up to a 7x trade. And so that's where you can make a ton of money in one trade. And now those don't happen very often, but when they do, they can make your month or your year. What actually happened today was we're looking at a chart of the ES futures right now. And you can see right there, I actually had an order put in. We're at a support level. There's a really nice double bottom here with a strong candlestick, and I put in a buy order. The market was kind of being a little crazy, and so I missed out on a trade here. It was frustrating because if we look at it, it went really well in my favor. And so I was a little frustrated over that. FOMO. Yesterday, actually, the market had a lot of movement and I wasn't able to capture any of it because none of it set up. And so today talking a little bit more about the emotions of trading, is I was a little frustrated and feeling FOMO. 5 minutes later, you can see that it worked very well. It would have been a good entry. And, I'm kind of kicking myself a little bit. And what I did was I refocused and said, you know what? There are other things going on in the market. I am looking at oil and I'm looking at, other markets. And right here, just zooming forwards in that recording a little bit, I switched to taking a trade in oil because there was another potential opportunity. And so you have to try and reset or deal with your emotions when you're getting frustrated, because if we just kind of look at this entry here, is if I actually pull up the 15-minute chart of oil for this to show you where that level was. And so the market, this is kind of a really far level. I don't normally go this far back in levels, but you can see that there was a very high up here where the market had sold off and it's been like 2 weeks before we've come up there again. And so zooming into today, the market had come up there, sold off, and then it had kind of been a little choppy. And then we had kind of a spike up into it, going actually to a smaller time frame chart to show that a little better. The market had spiked up into that level, sold off, a little FOMO even off of this move, being like, dang, that's a sweet move. I wish I caught that. And then seeing the market come up here again and remembering, hey, just be patient, wait for the thing to come to you, and wait for a setup. And so got in based on the market had kind of chugged up here, a nice movement, and then you can see our classic exhaustive move. This candlestick right here is massive out of nowhere, right into our level. And so what happened was I figured, okay, that looks like it's doing a kind of climactic move. It had a little bit of a sell-off, pull back to that. Like always, I want to wait for that lower high or some kind of retest and pullback that the market does, because I want to see the market, well, maybe the trend keeps going here and you can see it's still kind of in our trend line. It's not a clear break. And then right here, it set up an actually good looking candle for this. And so because of that, it made kind of a nice double top. And so I didn't actually get in on this candlestick right here because it's kind of small. And so what I did instead was the second candle after it, it was a pretty good bearish candle. And so I thought, okay, these two candles combined show, I would say, a candlestick that looks like this. It's kind of a pretty big bearish candle, and I want to jump in at the break low of that candlestick. So this isn't the normal style that I get in all the time. A lot of the time I like to wait for the one candlestick, but this one I kind of waited, saw that, okay, well, maybe it comes here, maybe it goes up here and keeps going. But once it kind of broke this, I think that was a solid kind of entry. And from there, well, things went pretty well pretty quickly. There was news coming out at around this time I knew about. And so once the kind of market moved down to here, I moved to break even just in case there was some crazy news that switched the market against me and just, you know, made a massive candle. I don't want to turn this into a loss, right? But then once we got down here, this is about 3x, you know, $1,800 is 3x. And so I'm thinking, okay, again, I don't want that news to come back on me. I want to ratchet up my stop and get these profits. You know, it's the end of the month. I want to just add on to my month. You know, there's definitely in the back of my mind, I'm still thinking of the results, even though I try and remove them from my screen and as much as possible, not think about them. And then, you know, from here, I'm looking at, okay, there's previous candlestick, that's what we're looking at. This starts to move insanely fast. And so this is where the news pops and you can see that the market goes crazy. And so I'm thinking, okay, what do I do here? And so to manage this, I'm thinking that, okay, I can't wait for the market to pull back on me like this. You have to tighten up way more than normal. Usually I have a, you know, a previous candlestick trailing stop or like middle of the bar, but this bar right here is like $1,500 worth of movement. And so there's no reason to let the market move that far back on you. At some point, you do have to think about the money and you just have to close out because this is some crazy news. Sure, there's the potential for it to pull back and keep going even more, but don't get greedy, take the easy money and just move on with your day. Now, this has been a really detailed walkthrough of how I look for my trades, but there's one thing I didn't really touch base that much on in here, which really is important for kind of finding that final confirmation, and it's really reading into the candlesticks. This video right here will talk about how I really read candlesticks and look at candlestick patterns, and it will be very, very crucial for your trade entries.